Good afternoon, everyone. Thanks for logging in. Let's wait for another 5 more minutes for more people to join us. Hello and good afternoon, everyone. My name is Zian. I'm with the Bursa Malaysia Library, which is also known as the Bursa Malaysia Knowledge Center. Welcome to the Authors Talk series, which is an initiative brought to you by the Bursa Academy Group Sustainability. We have kickstarted the series with our first talk last month in May by Mr. Ng Chu Han, author of the book Once Upon a Time in Bursa, on which he spoke about investing with the right mindset. Today's talk will be the second in this series. In this session, it is a pleasure to have with us today Ms. Lim Mei Ching, author of the book Be Your Own Fund Manager. She will share with you her FATA strategy and the key criteria for stock selection. A former fund manager, Mei Ching has more than 12 years experience in the investment banking industry, where she has held different portfolios relating to asset management, research, corporate finance, and debt capital markets. She's currently the finance director of Marico Sendirian Berhad. Mei Ching holds a Master of Financial Management with merit from the Australian National University and a Bachelor of Business and Commerce from Monash University. She is currently a part-time student pursuing her PhD in finance at UPTREND, Malaysia. This talk is a hybrid session. Thank you to those who are present here at the Bursa Malaysia Theatre, where the talk is held, as well as those who have joined us via the Zoom platform. Mei Ching will speak for about 45 minutes. The Q&A session will be held at the end after a talk. You can type your questions at the chat box in Zoom. And for those who are here at the theatre, you can ask your questions by speaking at the microphones located at both sides on the aisle. Without further ado, let us put our hands together and give a warm welcome to Mei Ching, who will share with you on how you can be your own fund manager. Mei Ching, the stage is all yours.
Thank you, Zian. Firstly, I would like to thank Bursa Malaysia for giving me the opportunity to to talk about my book. I think it's truly a great honor to be able to present on this platform. And hopefully with this BUSA author series, it will encourage more authors, local authors, to write about investment and finance related subject. I know there's a lot of finance books in the market, especially those written by the foreigners, but there are not many written by local authors who has previously worked in investment banking industry. So after leaving the investment banking industry about 1.5 years ago, during the lockdown, during the COVID period, I thought, why not I share my knowledge, both on the buy side and sell side of equity research with the general public, something that is more relatable, something that I can actually share my experience working in the Malaysian equity market for the local investors. And the book, Be Your Own Fund Manager, is basically a combination of the fundamental analysis and technical analysis under the concept of FATA. FATA is basically strategies which combine fundamental analysis and technical analysis. So in Chinese, FATA means prosperous. It doesn't mean that you apply this method, you'll be prosperous, but it just basically means that you increases your chance of winning a trade in the stock market and reduces your risk of investment. So hopefully you will enjoy the talk. My talk will be on three basic outline, which is fundamental analysis, technical analysis, and also portfolio management. So the book, just a little bit about the book, it's different in the sense that it's full of colors, with cartoons and some humor. Some actually laugh when they read the book because it's a bit funny. So it's very reader friendly, even if you are a beginner in stock investing or you have never invested in the stock market. It's one of the books that you could use to guide you, and hopefully you will enjoy reading the book. So I shall start my presentation. Basically, I would like to say a disclaimer as well. This presentation is only for educational purposes. I do not offer any advice or buy or sell recommendation on any stocks in particular, and therefore not liable for any trading or investment decision. Hi, those Zoom participants. I see there's 116 participants there. Sorry if I may look elsewhere because I'm also having a hybrid meeting here. If behind my background, you can say it's a library. It's a very beautiful library in BUSA. Hopefully more people will come to BUSA Library after this talk. So I will just start on top-down approach. Basically, it starts from the economy and then from the sector analysis and then down towards the company analysis. So how do we analyze stocks? Well, investors basically use two school of thoughts, which is fundamental analysis and technical analysis. Basically, these two school of thoughts, some are pro-fundamental analysis, some are pro-technical analysis, and they usually argue among each other. So a lot of books out there usually support one type of analysis, and there's seldom any book that actually combine both. So what is fundamental analysis? Have you seen those research reports written by analysts, from various investment banks? They got target price here and there. Then you wonder how come the target price different from different analysts on the same stock, how they actually analyze their stocks. And because it's a very subjective thing, different analysts have different assumptions. Different analysts have different experience, different thoughts about their stock. That's why for the same particular stock, even though all of them are using fundamental analysis to analyze stocks, they have very differing target prices. And if you want to know whether the analyst is good, you can keep their report for the next few months and check whether it actually beats, whether it actually the target price actually achieved or not. So what analysts when I was in research department, basically I analyzed companies and I analyzed their profit and loss, cash flow statement and balance sheet. I also visited companies for the first time in my life, visiting factories, and I was quite excited at that time. And I was in 2007, that was like more than 14, 15 years ago. Excited in the sense that I got a job as analyst and I get to see different things, different perspective, how analysts actually analyze stocks. So that is fundamental analysis. And what are the key criteria for stock selection in fundamental analysis? Now, if you are listening here, 122 participants, you may snapshot the slide here. This is just a guidance for how you want to select stocks for your stock selection. Now, I'm not saying that if you follow all this, you will be able to make money. What I'm trying to say here is that this is just a guidance. Nothing is guaranteed in the stock market. As you know, the past few weeks, market has been quite bearish. And so the first criteria for stock selection is that it has to be low valuation. That's why I mentioned low PE or price earning growth below 1. Why I mentioned price earnings growth below 1 is because growth has also need to be taken into consideration. I don't mind paying for a high PE stock if the growth is more than the PE. And the company has to have strong earnings growth. The company also has to be in a growing industry with attractive valuation among its peers, low gearing and strong balance sheet, good track record over the years, not some companies, 1 year do well, 1 year don't do well, then your share price also will not be performing. So you want the share price to consistently perform every year. And therefore, you must find a company with good track record. It's important that you just buy a stock, not just by mere speculation, but you buy a stock because there's a real business behind it. Coming from a family who has in business for more than 30 years, it also gave me a glimpse of how to run a business. And I also incorporated what I've learned, my exposure in business in the book as well. So apart from that, it's a good management that's important in the in selecting of stock. Good management in the sense that the drivers of the company, do they know what they're doing? Does the CEO and towards the key executive and also the lower levels, are they loyal to the company, and do they understand how to bring the company to the next level? And also good dividend yield. Not saying that you need to buy all dividend stocks, but this is just a guidance. It's always better to have a good dividend stock because in times of uncertainty, usually dividend counters tend to be more less volatile. So do you need to fulfill all these criteria? Not necessary, but it's good to fulfill all. You know, your partner didn't fulfill every criteria, right? But you still buy into it. So hopefully this is just a good guidance. And hopefully this could be used as good guidance when you do not know whether it's a stock to buy. You can actually use this as your fundamental analysis guidance. So this is just one part of analysis, which is fundamental analysis. Do you realize some companies fundamentally very strong still continue to stay at a low level? Why? Because technically it's on a downtrend. So apart from using fundamental analysis, it's important to incorporate technical analysis, something which a lot of investors do not incorporate together because fundamental and technical analysis tend to contradict each other. Fundamental analysis tend to use for long-term trading, technical analysis tend to use for short-term trading. So how do you incorporate both when both are two different schools of thoughts? And this is one of the only books in Malaysia that actually combine both fundamental and technical analysis under the concept of FATA, prosperous. I'm not saying, again, the disclaimer, I'm not saying that you apply FATA trade technique, you would definitely be FATA or prosperous. But I'm just trying to say that if you apply it, it reduces your risk of investment with better upside potential. So we also need to study psychology effect of the stock prices, and we need to use technical analysis to identify the entry and exit of the stock. Basically, you want to know whether the buyers is in control or sellers in control. And basically, charts don't lie. So it's good to refer to charts when you want to time your market entry for the particular stock. After finding a good fundamentally strong counter, you may use combined with technical analysis to enhance your portfolio investment. Basically, it's a psychology aspect of investment. Now, this is uptrend. It's quite easy. You can see higher highs, higher lows. A lot of people know this higher high, higher lows. That's why it's uptrend. But now this is a downtrend. A lot of people are very denial. If they have bought this stock and it's downtrend, even if an expert in technical and analyst, sometimes they may see it's a uptrend because they are biased towards it. So if you want to analyze technical analysis, get a friend to help you see the chart to make a better judgment, because sometimes we may be biased because we already have stock holding in that particular stock. So it's important to incorporate and also discuss with other people, with your friends or maybe your family or whoever. I remember when I was in the investment committee, when I buy or sell a particular stock, I need to justify why I buy and sell a particular stock. So if you are buying a business, it's good that you also justify to yourself, why are you buying this particular stock? Now, I summarize it under this table here. So under this FATA concept, if both fundamental and technical analysis is indicate a strong indicator, buy and good luck. Of course, you need some luck when you're buying stocks. And what if fundamentally is strong, but technically is weak? Well, you may wait for a reversal in the share price. No harm waiting for good timing in the stock. There's a lot of stock in Bursa Malaysia for you to pick and choose. the stock will not run away. Okay, and another thing here is that if fundamental is weak, but technically is strong, avoid, as there's always a better stock out there. What if both are so weak? No need to think lah. Just wait for a better timing and forget about it. So, which stock to buy? Use fundamental analysis. When to enter? Use technical analysis. I hope this conceptual framework, which is FATA concept, will be able, something that you will be able to take home today to incorporate, and more people will start to learn technical analysis to combine with fundamental analysis. In my PhD study, I'm also doing this thesis, how to prove that by combining both fundamental and technical analysis actually enhance your portfolio performance, something which is quite lacking because in some investors, they are either fundamentalists or technical analysts. So I propose that it would be good that you can combine both, and just now I just showed how you can combine both to enhance your portfolio return. So now I'll just talk a bit about fund management, about portfolio management. Now you have choose the right stock, you have entered the market. How are you going to invest your portfolio of funds? Well, if you realize, if you have bought a unit trust, most of the stocks that are invested in the stock market, in unit trust, usually the portfolio exposure per stock basis is less than 10% because of the investment mandate. They are not allowed to go beyond that unless it's the benchmark index is more than 10%. So in my own portfolio as well, I do apply diversification strategy. A good strategy, if you just started investing, it would be good to invest about 20 stocks, which is about 5% per stock basis. Basically, why people say, oh, why 5%? Ching, you are not daring enough. Yes, it's true, but you know, I may be wrong in my analysis. So if I have 20 stocks in a portfolio, it actually reduces my risk and reduce my concentration risk. In the event that any of the stock turn bad, I can always switch, I can always make a return in my stock portfolio. So no harm making smaller gains. Most important thing is resilient in times of uncertainty. As we can see, the past 2 months, market has been very bearish. And if you're not well diversified in terms of portfolio, stock selection, and sector allocation, then your portfolio might be more volatile and more deeply hurt. And especially if you're just starting, it's better to be well diversified. It's good that you can manage the fund in such a way like how fund manager manage, whereby it's a diversified portfolio. If you look at this, assuming I have 20,000 and I have 5% each per stock, I actually invest across various sectors. I'm not saying that I need to invest in banking, construction here, but I'm just giving an example that if you want to invest, investing should not just be concentrated on one particular stock. It should be diversified, not just in terms of stock, but also diversified in terms of sector. So in the case whereby certain sector doesn't do well, you have other sectors that would be able to cover. Just like your nasi lemak, you know, you like to eat nasi lemak. I'm sure everybody like to eat nasi lemak. You know, your nasi lemak got sambal lah, your nasi lah, your sotong lah. So even if your nasi is not nice, right, but if your sambal is nice, your nasi lemak still tastes good, right? So what I'm trying to say here is that your portfolio should be a mixture of a lot of stocks. Even if you think that if you think that 20 stocks is too much, then probably you can reduce it to 10. But what I want to point out here is that have a well-diversified portfolio for times of volatility in the market. Know what you are buying. Some people just enter the stock market, you know, out of speculation. But it's very important to use. I think FA+TA website has a lot of information. You can get your annual report, your press release, your quarterly statements, and all this. And all this would be able to give you a better glimpse of where the market is heading. So apart from FA+TA website, I would like to encourage for those who are listening here today to serve FA+TA Marketplace and FA+TA Academy. FA+TA Marketplace have a lot of research reports, and FA+TA Academy actually invited a lot of good speakers to talk about finance, and these are reputable speakers, and it's good that if more investors will start to serve all these websites, and good to justify why you are buying or selling a particular stock. And if you, after buying the stock, do you actually just leave it there, or do you have a watch list? It's good to have a watch list of stocks because I think that buying and selling of a stock doesn't just end there. You need to have a watch list to monitor the stock portfolio, just like what the fund managers are doing. They do monitor on a daily basis so that they'll be able to allocate overweight or underweight certain sectors or certain stocks to make sure that the portfolio actually beat the benchmark return. In terms of market, I think apart from looking from the perspective of historical data, it would be good that you look from you forecast the future. That's why a lot of analysts actually have models to forecast. Do you actually need all these models? It'd be good to have if you can have, but then again, by having very complicated models, it's very time consuming, and when it's time consuming, it's very difficult to make a judgment because sometimes when you analyze too much, then you may not be able to make may not be able to time the market well. It's important that apart from making a good model, you also need to be timely in your stock selection and make your decision in a timely manner. Control of emotion. I think this is a very difficult thing to do. No matter how experienced you are as an investor, even professional investors also have this problem of controlling of emotion. That's why to a certain extent, robots do better than humans. So it's important to diversify, to control your emotion. By diversification, you actually reduce the attachment to a particular stock. And by doing that, you have better control of emotion. And it's important to control emotion. And to do that, you should apply fundamental analysis. How do you apply fundamental analysis? Is that you find the intrinsic value of a stock, whether the stock is trading below its intrinsic value or whether it's above its intrinsic value or known as fair value. So if the company you buy is trading way below its intrinsic value, then it's a buy. If the company is trading way above the intrinsic value, then it's a sell. So what I'm trying to say here is that it's important to control your emotion when you invest in stock market, because stock market is not a guaranteed return. And there's this net profit run. Some people tend to make a profit and then want to leave, want to sell too quickly. Well, if it's a good company, there's no harm letting the profits to run, especially companies which good fundamental year after year. And if you really want to take profit because you want to put some money, you want to cash out, then probably you can take partial profit and let the rest run. But what's important when to exit the market is to conduct your own fundamental analysis, to derive your own target prices based on PE valuation, which I discussed in my book, and hopefully that you'll be able to make a better judgment, because sometimes when the company that is doing well technically is on the uptrend, it may continue to go higher and higher. So until to the extent that you can lock in some profit and let the rest run. Now, I think I want to bring the concept of cut loss. A lot of us, I think robot really can do better than us because robot has no feeling. We have feeling. I want to admit that I have never been right all the time. And it's important to be less egoistic in the market. Nobody can always time the market so perfectly all the time. So if you make a mistake in the market, try to cut losses. If you think that there's no more, if you think there is further downside risk to the particular stock that you have bought. And in terms of cut loss policy, I would recommend a 25% cut loss policy. 25% is basically about 1/4 of your 100%. So by having a cut loss policy, it's like buying insurance. If you cut loss and if the company continue to drag down lower, you may lose more. But if you cut loss, maybe by collecting whatever money left, you can actually invest into other stocks that could give you a better upside potential. So this cut loss strategy of 25% is very important. Just now I did mention about 5% per portfolio basis. If you cut loss at 25%, just imagine 25% of 5%, your losses is only 1.25%, which is very manageable and it's easy to make a comeback. So you will not be too hurt even if one particular stock drop drastically. So I would like to emphasize that cut loss is very important when you invest in the market, to be less egoistic, be humble, and there's no way that we can make money all the time. You know, the past few weeks, market has been quite bad, whether is it regionally or Malaysian market. Sometimes you wish you have more cash, right? So sometimes if there's no stock to buy, don't buy law. Maybe the market is telling you don't buy. Sometimes cash is king in times of crisis. If you are just starting out in investing and you want to put everything in stock markets because you think that it's already too low and you think that market is going to go up, I personally feel that it's good to stagger it. What do you mean by staggering is that maybe this month I put another few thousand, next month I put another few thousand, so that, you know, I average it. I do not, if you put everything at one go, if market drop further, there's no more funds to buy. So in times of crisis like this, I think cash is king. And it's okay if you don't have a stock idea. No stock idea is probably a good idea. Not necessarily that you're invested, you will definitely make money. No stock idea. If the market crash and you have funds, you can enter at a lower level and give you better upside potential in the near term. So I would like to emphasize that cash level can be raised according to market condition, to what you think, what you read from the market. You think that if you think the market is bullish, then you can raise it to 80%, 90% invested. But if you think the market is bearish, then you can even bring it down to 50% invested or 40% invested. So cash level can always be adjusted according to market condition, and there's no right or wrong. Only market or only time will tell us whether we are right or wrong. I would like to emphasize that even though I'm promoting investment, do not borrow money to invest. It's not a guaranteed return. I think some people also got burned recently. So if you have borrowed money to invest, you will not be able to make a rational decision because you are affected and you may have to sell, even you think that it's undervalued, because you are forced to sell and return the funds because you are borrowing the funds. So it's important that whatever that you invest in the market should be the extra funds that you have and not from borrowed funds. Bear in mind, funds that you borrow also have a cost of borrowing, and therefore don't borrow to invest, and invest within your limit, invest within your means, and not leveraging actually give you a good holding power. If you actually use your saving to invest, like in such market, you have a very good holding power. You can actually ride through the volatility, and there's no need to borrow to invest. All in all, I would like to encourage investors to be patient, especially if you're using fundamental analysis. Don't expect to make big returns, you know, especially in the near term, especially in such market condition. You probably have to slowly, just like the cartoon here, you know, you have to slowly water the plants and then wait for the plant to grow. If you're buying a company and for its intrinsic value, you may have to hold for a long period of time. But it'll be good that if you can combine technical analysis for better timing of entry and exit. And I hope you'll be able to gain something today. You can find this book in the library. It's in Bursa Library. If you look at my background, the library has about more than 15,000 titles of books from finance-related industry, from finance books. I was very impressed with the library. It's a very conducive place to study, very good conducive place to read books, and the librarians are also very kind and helpful. So come to Bursa Library. It's open to public. To the 135 participants here, please come to Bursa Library. You can find my book, not just my book. There are a lot of local authors' books too. And I believe that Bursa will continue to encourage more local authors to showcase their book and encourage more local authors to write books on Malaysian equity market. Thank you, Zian.
Thank you, Mei Ching. Sorry, just give me one moment. Thank you, Mei Ching, for a good session and showcasing our Bursa Malaysia Library with the attendees today. Okay, if you have any questions that you would like to ask Mei Ching, you can type in the chat box. Okay, Mei Ching, we have a question. We have questions coming in. Okay, question number 1. Your thoughts of buy and hold good value stock, like banking stock that provides high dividend.
Regarding banking stocks, regarding banking stocks, personally, I'm bullish on banking. Why? Because with the high interest rate, we may see a potential margin expansion. And as you know, loans growth will continue to be strong with the growth in the economy. The first quarter GDP growth just came out, which is about 5%. So loans growth expected to be strong, margin continue to grow, and dividend, yes, it's good. Our KLCI, if I'm not mistaken, our dividend yield is about 4 to 5%. Most banking stocks also give a good dividend at the moment, which is about 4-5% as well. So buy and hold, yes. If you are fundamentally believe in banking stocks, then I think that it's okay to buy and hold.
Thanks, Mei Ching, for the answer. The second question is your thoughts again on using robo.
Yeah, I think
sorry, sorry about it. I forgot to unmute my speaker. Okay, the second question, Mei Ching, is your thoughts again on using robo-advisor like Stashaway, Saif, Wahid, etc., and DCA without thinking much about it.
No, I think that's a very good question. Robo-advising. I think that's a very good question on robo-advisory. Basically, I still believe that it's important to have fund managers to invest, or maybe yourself invest. While robo-advisory maybe also has its good point, like they can cut loss pretty well, but then again, they can't look at non-quantitative factors like management, the future growth of the company based on branding. So there are certain things that robot cannot do, just like the robot cannot see whether this management will be able to drive the company to a greater heights. So there are advantages of using robo-advisory, but there are also advantages of using fund managers and also your own judgment. Bear in mind, robo-advisory, or sometimes they also have certain criteria being set. So in a way, even though it's so-called robot system, but behind the robot there's a human person there who actually set the criteria. So why not you set your own criteria instead of relying on other people to set your criteria? So hopefully I answer the question regarding robo-advisory.
Thanks, Mei Ching, for sharing your thoughts on this. Our next question is, if I don't have a lot of technical knowledge or time, could I buy based on historical price? For instance, I buy Maybank at 7 ringgit 80 cents because I can see the price is low based on historical pricing, and it is a blue chip stock. What are your thoughts on this kind of simplistic strategy? What are the risks?
Thank you for the question. I think using historical data to forecast is also very important, because this is the only data that we have. But it's important to look at future, not just relying on historical data alone, because as I mentioned earlier, when we buy stock, we are forecasting the future. So things can change. I'm not saying whether we should buy or sell Maybank. What I'm trying to say here is that when we buy into stock, we are buying for future, not just for stock. Even when you buy property, housing or whatsoever, you actually look into the future. So apart from using the historical data, you should also use the future earnings to decide whether this stock is worth buying. You may be able to read a lot of research reports, but also do your own judgment and probably go to Bursa website to check out the company stock in particular. What is the prospect of the company? Bursa website has a good annual report, quarterly statement, quarterly results, and also press release. And also you can go to the company website to gain an advantage or gain more information about the particular company before investing. So apart from relying on historical data, it's important that you buy the stock for future and important to forecast the future. historical data alone not necessarily will give you a good winning trade.
Thanks, Mei Ching. The next question is, should we max out our EPF before investing, or should we take out our EPF to invest?
I think that's a very good question. I think one thing good about EPF is a guaranteed return. I don't encourage to take out from EPF. I'm also contributing to EPF at the moment. So it's important to have a guaranteed return. As I mentioned earlier on, investing in stock is highly risky. It doesn't guarantee you return. Sometimes the returns from stock market can be lower than the EPF too. So it's very dangerous to take out from EPF and invest in stock market. What is secured is better left secured. This investing in stock market should be the extra funds that you are willing to spend, willing to lose in the market. And I don't encourage to take out from EPF. This is just my personal view.
Thanks, Mei Ching. We have a question from Muhammad Aizuddin. His question is, what do you think of the crypto market?
Crypto market is another set of class. I personally prefer investing in stocks instead of crypto market. Why? Because you can find the intrinsic value of a particular stock. Every stock out there, every company that you invest is a real business behind it. And for crypto, I don't even know how to value it. I don't even know how to use PE or what valuation to define what is the intrinsic value. So it's very highly speculative. Then again, because crypto actually crashed recently, it may make a comeback, a technical comeback. So I'm not saying that you should buy or sell crypto. What I'm trying to say is that it's a riskier class of asset compared to stocks. When you are buying stocks, you are really buying a real business behind the stock. Whereas you're buying crypto, you are buying mere speculation.
Okay, Mei Ching, there are another another question from Muhammad Aizuddin is this a good time to buy?
Crypto, is it? Sorry, I'm not a crypto expert. But you can use technical charts. You can use my book to learn the basic of technical chart. Go to YouTube, learn how to read technical charts. Technical charts will help you to have a better entry and exit from crypto. So you don't use fundamental. I don't know how to use fundamental for crypto, but you can use technical analysis to help you to have a better entry and exit for cryptocurrency.
Thanks, Mei Ching. I think Muhammad Aizuddin is referring not on the crypto market, but the stock market as a whole.
Yeah, stock market. Looking at Malaysian equity market, I think this year was quite a massive sell down in the past 2 months. I personally think that there's more upside to it. Market is now about 1.4. I just checked 1.46 or 1.45 something. Basically, our PE valuation is one of the lowest in the Asian region. Forward PE is about 14 times. Our dividend yield is about 4 to 5%, and we are cheaper than markets like Thailand, Philippines, and Indonesia. So if you ask me whether it's worth buying, some of the companies are trading way below its intrinsic value. I think there's too much of concern over a recessionary pressure on Malaysia. But if you look at it, our GDP is still growing at 5% in our recent first quarter GDP, and also our exports are very strong, growing double digit with the current account surplus. So I believe that with what you see at the moment, it's I wouldn't say to enter now. You can stagger it. What I'm trying to say here is that there's still a lot of volatility because technically our market is not so bullish at the moment. It's a bit bearish. But what I'm trying to say that if you have a long-term horizon, yes, I think Bursa Malaysia stocks actually offer a lot of attractive companies to invest, trading at very low historical PE, trading at very attractive dividend with good upside potential. And actually, Malaysia benefit from higher commodity prices. If you look at oil and gas and plantation stocks, you look at some of their earnings, they register quite solid earnings, and it's expected to be strong in the near term because you have not seen the CPO or crude oil collapsing yet.
Thanks, Mei Ching. Okay, we have a question from Nurin Sapawi. Given the market condition now, what is your advice for a newbie to invest in the share market?
I think it's important to stagger it. We do not know how low the market can fall. Even though I think it's attractive, there could be further downside risks. So what I mean by staggering is that don't put all your cash at one go in the market. You can stagger it for the next few months. That means buy a few stocks this month, buy another few stocks this month, next month, and buy another few stocks in the next few months. So you can stagger it, yeah. But don't be too overconfident.
Should we apply the same FATA for REITs also?
This FATA concept, which is fundamental technical analysis, is applicable not just on REITs, it's applicable across sectors. So talking about REITs, yes, REITs has been delivering quite solid gains recently. If you look at malls, wow, it's packed people. So sometimes when you do analysis, not just by reading, you can actually go and visit. Like if you want to invest in REITs, you go and visit the REITs, to say you want to visit that particular shopping mall to give a glimpse of, you do your own observation whether the mall is worth buying.
Thanks, Mei Ching. Our next question, understand stock market normally see a 10-year cycle where there is a recession every 10 years. Do you think we are seeing a recession now?
As I mentioned earlier on, the latest GDP figures of 5% of growth doesn't indicate recession. What technically recession means two consecutive years or two consecutive quarters of downtrend in GDP. So we are not in recession, we are on recovery mode. I don't foresee a recession yet at this juncture.
Okay, our next question comes from anonymous participant. Do you include catalyst as part of your analysis? I found that some catalysts just created to push the counter.
What is that?
Catalyst. What is catalyst?
Sorry, I don't understand the question, sorry.
Okay, maybe we go to the next question first. Your thoughts on liquidity mining and staking for crypto?
Crypto, actually, as I say, it's highly speculative. I would rather invest in stock market rather than crypto because there's a real business behind stocks. I don't know how to value crypto seriously. If you want to play crypto, you can, you want to invest in crypto, then you may study technical analysis to help you for your entry and exit level. But basically, I really do not know how to derive a target price. There's no fair value to it. There's no intrinsic value to it. Oh, is there any asset in crypto? It's very hard to analyze crypto. So, and it's highly speculative. Then again, come back to FA+TA, invest in the real stock market, invest in the real companies. Why do you want to invest in crypto? So you may invest, but try not to invest too much here.
Thanks, Mei Ching. Our Malaysia currency is weakening. Do you think that we should move our money out from Malaysia and invest somewhere else, maybe to Singapore?
Our currency depreciated quite drastically recently. Actually, if you look at the US dollar index actually more than 100 now. The US dollar has appreciated partly because of the high interest rate in US market. So I believe that if our OPR, assuming that OPR start to increase in the second half of this year, then I think our ringgit will also start to appreciate. So I don't think that, I think we probably have seen one of the worst in ringgit. I think going forward, ringgit should appreciate over the US dollar. And you look at the exports, our exports very strong. Our exports more than imports. We are growing at double-digit exports level. So in terms of foreign exchange, we are seeing more inflows from the exports.
Should we spread our investment across countries like buying China stocks or US stocks?
I do agree of investing diversification, not just on stock and sectors. You can also diversify in terms of country. But then again, we are staying in Malaysia. If everybody think of investing overseas, then how about Malaysian market? Why not invest in Malaysian market? We have so many good companies here trading at way below its intrinsic value. And not only that, we have an upper hand if we invest in Malaysian market because our news flow comes to us faster. So rely on Bursa. I would recommend to invest in Bursa market. As I mentioned earlier on, Bursa market in Asia is one of the cheapest. So maybe with this sell down in the Bursa will give you a good opportunity to invest Malaysia over a longer period of time.
Okay. Hi, Mei Ching, can you share with us, do you do any analysis on market outlook for the second quarter 2022 for Malaysia stock market performance? If yes, what are your predictions?
Actually, to be very frank, a lot of research houses also got it wrong. If you look at their target price, most of it is 1,600. But well, we still have still have about half a year towards the end of the year. So I wouldn't say they're wrong yet. So maybe they'll be right. And most research houses actually predict about 1,600 and above. I also believe that. So now we are about 1450 around there. So yeah, I think there's more upside to Malaysian market. But then again, I can be wrong. We are not end of the year yet. We will see how things will pan out towards the end of the year. But then again, Bursa has been offering a lot of stocks trading way. A lot of stocks are all-time low. It's a good opportunity. If you have long-term horizon, then I think that you may be able to benefit from the appreciation in the share price and also good dividend counters. So you get appreciation from the share price and also appreciation from the dividends.
Okay, there's a question asking you to share your thoughts on if, let's say, a fresh grad want to start investing in the stock market, what do they need to do first? What are your thoughts?
I think for fresh grad, it would be good that to study fundamental analysis and technical analysis before investing. Get a feel, don't invest too much, invest within your means. As I said again, it's not guaranteed return, so you may stagger your funds. And most important thing, study the company, study the business, and make a judgment based on the valuation you forecast. And don't be too overconfident. Go step by step. Read more. Buy my book. Be Your Own Fund Manager. It's a beginner's guide to stock investing. So I'm promoting my book again.
Okay. Our next question is: should we just buy ETF and DCA all the way without FATA?
Without what?
FATA, your strategy.
Without doing the FATA is something like buying passive managed fund. I'm not against it. Sometimes there are index funds or index funds actually sometimes outperform fund managers as well. But there are also fund managers who actually outperform the index fund. So depending on what you want, you can have some index fund, you can have some that is managed by fund managers by buying unit trust. So everybody have a different risk profile. So depending on your risk profile, I'm not pro or against investing in ETF, but what I'm trying to say is it's up to you. Yeah.
Thanks, Mei Ching. I'm just trying to read the question that was not answered earlier. I think the person is trying to ask your opinion of what are the thoughts like? People say buy on rumors and sell on news.
Sometimes it works, sometimes it doesn't work. What's important is that to use technical analysis to help you as well for better timing of entry and exit. Sometimes this rumor thing, I don't really follow rumor. I use fundamental and technical analysis to guide me for stock selection. So then again, it goes back to the foundation of research, which is fundamental analysis. Look through the profit and loss, the balance sheet, the cash flow statement, analyze the company in detail to make a better judgment, to make a more informed decision rather than following rumors.
Which department or job title a fresh graduate should work in a banking field if he or she wants to learn about investing?
Very frank, when I joined OSK in 2007, I don't even know what is investment. What is stock market really about? So I think that it's good to join research department, apply to research department in various investment bank. You can contact them. Maybe when you read the research report, you can see their name there and email, right? Email them or see whether they will give you an interview. Hopefully they do.
Thanks, Mei Ching. We don't have any more questions from the Zoom participants. Any questions from the floor here at the theatre? If you have any questions, you can speak to the microphones located on the aisle. Yes, we have one question from Mr. Tan Sai Hap.
Thanks, thank you for sharing. The most important question from today: what stock tips do they have?
I don't offer any stock tip. As I say, I also can make a wrong judgment on stocks. So I encourage everyone to be your own fund manager. So the best stock picker is actually yourself. Read my book and you'll be able to find a good stock out of it.
Okay, that's okay. Earlier you mentioned portfolio investment. So with the overweight and underweight sectors, do you actually advisable to take kind of a certain weightage to a portfolio?
Yes.
Then the other question is, how often should you review our portfolios?
Thank you for the question. Very good. Yeah, I think when I was in fund management, we allocate our portfolio allocation according to market condition. So you can overweight sectors you think that you are bullish on, and underweight sectors you think that you are bearish on, or maybe don't even buy. But more importantly is to diverse across sectors. Even you think it's bullish, but it's just if you only have one sector in one portfolio. So if one of the stocks actually fall or go up, the rest also go up together. So what's important is that a well-diversified portfolio and adjust according to market conditions.
Thanks.
Thank you.
Thanks, Mei Ching. Any more? One last question. Okay, if you do not have any more questions, we will end this talk today. Thank you, Mei Ching, for sharing, for a good session and sharing with us insights and tips on how we can be our own fund manager.
Thank you so much for 112 participants. Sorry if I'm not looking at you because I'm also looking at the lecture hall here. So thank you so much for the opportunity to be here today. And I hope more session for local authors so that more local authors will be encouraged to write about finance-related subjects. Thank you, FA+TA Malaysia.
Thank you everyone for your presence and attendance in today's session. For those who have joined us for the second time, thank you so much for tuning in again. For the first timers, we hope that you find Mei Ching's talk insightful and engaging, and that you're able to apply some of the tips that she has shared with you today. Okay, for those of you who are interested to get a copy of Mei Ching's book, you can contact us at the Knowledge Center. The details we will share in the chat box. If I'm not mistaken, the current retail price of a book is at 52 ringgit. But if you contact us and buy through us, you will get a 15% discount for the book. Okay, so last but not least, to stay tuned to us to stay tuned to our upcoming talks in July. We will have another author's talk coming up. So thank you so much for your attendance and participation today. Take care and see you all again.
Thank you. Thank you, everyone. Thank you, everyone. Thank you.